Much, Francis. Well, our local all-share index has been dipping in and out of negative territory. I think it is in positive territory right now. Markets somewhat mixed, I would say, generally. And in terms of the local currency, that has been relatively stable ahead of the midterm budget speech at 2 o'clock. Although it did lose a little bit of ground relative to the US dollar. The US dollar is generally firmer, which would generally put emerging market currencies on a back foot. We're seeing that the oil price remains fairly elevated, hovering around the $58 a barrel level. Part of the reason I wanted to mention, part of the reason why the dollar is firmer is because analysts and observers in the market think that Donald Trump may decide to choose a more hawkish US Fed chair for the beginning of April next year. So that has caused people to pile into the US dollar. And we're basically looking ahead for the midterm budget. It has so many implications. Market observers very concerned because there is evidence suggests when we look at data over the past number of months about the Treasury's ability to collect taxes that we're always under target, and of course we're spending far much more than we actually receive in revenue. Let's take a look at the indicators. Well, I'm joined by Michael Treherne. He's a portfolio manager at Vestact. Thanks for joining us, sir.
No, Paul, great to be here. It's been a long time since the medium-term budget's got this much attention.
Well, indeed it has. I mean, it's Malusi Gigaba's maiden speech, and of course there's a lot riding on his speech today. Now, let's start with international news. The dollar firming in anticipation that Donald Trump will decide to choose a more hawkish candidate for the Fed chairmanship. Why is this important? And surely monetary policy in any country is not about one individual.
Yeah, so first of all, the reason the market's getting to this conclusion is yesterday at a Republican brunch/lunch, Donald Trump stood up and said a show of hands who thinks this guy's good, and then another show of hands who thinks this other guy's good, and based on that the market's going, okay, he's going for the more hawkish person just based on the show of hands. That's rather comical. But moving over to the Fed, the chair is the person who guides it, and if needs be is the swing vote. They're the person that generally sets the direction or the tone of the meetings, and obviously based on that their opinion has quite a big amount of weight. So if they're more hawkish, they could then persuade people to go a certain direction. Obviously each member still has to vote, but if the general direction of the Fed is more hawkish, you would expect interest rates to be rising quicker than expected. Which is not great for us. Well, it means a strong dollar, which means that a lot of our imports then are more expensive, in particular fuel, which is already at $58 a barrel. If the rand weakens, or I should say the dollar strengthens, then obviously we're paying more in rands for fuel, which then increases the fuel price, increases inflation, and the man on the street then has to pay more for everything. And then looking to Europe, we have the European Central Bank making a decision on monetary policy. The market does expect that it will begin to taper. It will announce the beginning of tapering. It spends about 60 billion euros a month buying bonds and other assets. What are your thoughts on this, and is it positive or negative for emerging markets? Yeah, it'll be interesting to see, especially what ECB and Mario Draghi has to say, particularly given that Spain is in a bit of a precarious state at the moment where they're not quite sure what's going to happen there, and if there's a very big internal battle in Spain that then obviously has knock-on effects on the rest of Europe. So will they take that into consideration? But I think the main thing the market's going to focus on is, like you said, what does their taper look like? Currently spending 60 billion, do they halve it to 30, which seems to be the general consensus out there. Some guys are being a bit more aggressive and saying they're going to more than halve it and they're going to drop to 25. Maybe they say, look, we're going to take the route that the US Fed has done and slow things down a lot and not halve it straight off the bat. So we'll have to wait and see, and then we'll have to see what they say about interest rates as well. Are they going to taper and increase interest rates at the same time, or are they going to do a bit of both, just be slow about it? Yeah, general monetary policy wants to tell the market what they're going to do before they do it, so there's no shocks. And when you don't have shocks, things are smooth and the economy functions better.
Now, locally, obviously, all eyes are going to be on Minister Gigaba. There's a lot riding on his speech, but what will the markets in particular be looking at?
Yeah, look, I think the first thing I'm wondering is, what does his icebreaker joke look like? I think Trevor Manuel set that bar quite high, so that'll be interesting. But the main thing from a market perspective is, what does our current budget deficit look like? As you were mentioning earlier, Treasury has shown indications that they're struggling to collect as much as anticipated. I've seen that by lack of refunds to people. I think the Ombudsman is now overwhelmed with complaints, so that definitely shows we're struggling. How badly are we struggling is the question. And then, what does our spending look like? Have we spent more than expected? SAA, Eskom asking for money comes to mind. And in that gap, at the moment, we're looking at about a 4 to 5% budget deficit. And that's a deficit to GDP. It's not even a deficit to our revenue income. So that's a huge, huge number. Rating agencies want to see us below 4, and that's key, because if you're going to be running at a deficit, you need to borrow money from someone, and obviously if you're borrowing money from someone, the interest rate matters. So what they think of you is very, very important. So it's a very tight balancing act. How is government going to cut back expenditure, where they're going to cut back? Earlier in the news bulletin, talking about UCT wanting free education. That's not unique to UCT, that's across most of the universities. Will government have money to try to facilitate programs along that line? The big thing is where they're going to cut and how big is our deficit.
One of our viewers, I don't know if they were exaggerating in that tweet, saying that 3% of the people in the country pay 80% of the taxes. I don't know whether that's quite accurate. But indeed, in South Africa, you do have a very small tax base. So if government is looking to get more money, is it going to be practical?
Yeah, based globally, we're already at the high end of tax brackets, so you can't really push that envelope. And you're having a look at European countries and the US in particular now, who are cutting taxes. And we've got to remember, we play on a global stage. It's not just an isolated local stage. And when you're looking at taxes, if your taxes are too high, then people say, look, we're going to take it elsewhere because we don't want to be penalized for investing in your country. So I think you're going to struggle to increase taxes. Maybe there's been an argument for increasing VAT. But all these things only really come through in the February, the full year budget statement. The mini or midterm budget generally doesn't have any policy changes. So I don't expect anything there. I think it's just where we're going. And I think just in terms of where South Africa's at, there was that study done, I think it was in August, 17.2 million South Africans go to bed hungry every night. And that just puts things into perspective of where we're at.
And now, if his speech is negative, are we going to see a blow up on the currency today?
Well, we potentially could. Ratings agencies, Moody's, S&P, I think it is, come out 24th of November with their upgraded view on South Africa. If this budget speech is worse than expected, remember Moody's hasn't put us into junk yet, so we're skating above it. And the main reason that's important is we're part of the Citigroup Emerging Market Bond Index, which means that emerging market bonds are very much in fashion at the moment, which means our bonds are getting bought because we're part of that index. If we go to junk status, we're removed from that index. Anyone who owns our bonds as a proxy to that will be forced to sell it, and that means money leaving the country, which means a lot weaker rand to all our major currencies, importing inflation, high interest rates, wider budget deficit, and you can see how this keeps playing out.
You should be a lecturer. That was excellently explained. Thanks very much, Michael. Well, that was Michael Treherne, Portfolio Manager at Vestact. After a short break, our colleague Francis will have more business news for you.